Time for the big fat idea. Very pleased to welcome back to the show Brent Woyatt. He's here with me. Brent, I'm excited about this because you've got an idea that isn't on everybody's radar.
Yeah, no, exactly, Mike. At the beginning of each calendar year, our firm provides contrarian investment themes to our clients. When it comes to contrarian investing, we focus on areas which have been shunned by investors over the past few years, but where we believe industry fundamentals are past their worst point. So our objective is to select themes or equity sectors where we believe the odds are high enough for returns to be positive and or above benchmarks at the end of the year. So that being said, our number one contrarian call for 2017 is the energy, equipment, and services sector.
Now, you're a portfolio manager with Canaccord Genuity Wealth Management, and this is the kind of thing you look at. I just want you to flesh that out a little bit. I think it's a really interesting idea, energy, equipment, and services. Give me a couple of things that caught your eye when you were looking.
Yeah, let me give you 3 key points here, Mike. First, while the Energy Equipment and Services Group was up 34% in 2016, it is still down 37% over the past 3 years. However, the OPEC production cut in November has not only set a floor at about $50 a barrel, but higher energy prices and heavy cost-cutting measures have allowed many explorers and producers to repair their balance sheets in 2016. Number 2, there's a time lag between higher oil and gas prices and rig counts, such that the drilling activity is still fairly subdued. However, by the spring, we feel that oil production is expected to bottom out, leading to an acceleration in drilling activity and rising revenues and profits in 2017. And thirdly, throughout the recent downturn, the equipment and services companies remained very disciplined from a labor cost perspective. And with the upturn in oil prices last summer, we've seen a return to profitability. And despite last year's advance in stock prices, the equipment and service sectors remains deeply undervalued. So in summary, cheap valuation and a strengthening fundamental backdrop are such that we chose energy, equipment, and services as a top contrarian call for 2017.
Hey, Brent, let me come to just very quickly, what does the technical picture look like when you look at the charts and stuff of that group?
Yeah, I mean, they've suffered a pretty nasty downturn or bear market for several years, and then over the past about a year and a half, we started to see some positive base patterns on the charts where the shares were under accumulation either by insiders or some of the smart money. So during that accumulation period, money moved into smart hands, and then as the industry fundamentals have turned around, we started to see some bullish uptrends emerge in a lot of the stocks.
Let's give me an idea. Is there like an ETF I can play this with, or do I have to choose? I mean, I guess I can choose, obviously, some individual stocks, but I'm just thinking as someone who's not exposed to this thing, can you do a broader list there?
Yeah, so, obviously there is a handful of good quality companies that could be bought to gain exposure to the sector. However, in order to gain more diversification, there are a couple ETFs we're looking at. 2 that come to mind are the Bank of Montreal Junior Oil Index ETF, which trades in Canadian dollars on the TSX. The symbol is ZJO. And there's also the VanEck Vectors Oil Services ETF, which trades in U.S. dollars in the U.S. market under the symbol OIH. The BMO Junior Oil Index is a mix of Canadian and U.S. mid-cap explorers and producers, drillers, and service companies, while the VanEck ETF is primarily a large-cap U.S. drillers and service companies.
Let me just, again, give me an idea of, obviously this is for people who are looking for capital appreciation, but how long do you kind of regularly, when you're talking about managing your portfolios, you sort of have a time frame of which to hold this kind of an investment?
Yeah, I mean, these ideas obviously are for aggressive growth investors looking for capital appreciation, and because of the cyclicality of the sector, we would look at a 12 to 18-month time frame for the trade to play out. But then, after the cycle's run its course, obviously, these aren't buy and hold type of ideas.
Great stuff, Brent. Really looking forward to it. That's a great idea, one to put on the radar list and chat. Brent Woyatt is portfolio manager, Canaccord Genuity Wealth Management.